Bitcoin has been downtrending for the last few weeks with lower highs and lower lows. We're actually trading beneath the 50 weekly moving average. And today's Sunday, we got that weekly close. Will we close above or beneath it? Are there any signs of a reversal, a relief rally? I'm going to let you know in today's episode that there is a high probability that we do get that bounce very, very soon in the next 1 to 2 weeks of $5,000 to even $10,000 plus, guys. Okay, so if that is of your interest, make sure to stay tuned, guys, till the very end, because I'll be breaking down the different scenarios and where the opportunities lie here for the price of Bitcoin. Now, let's dive in through the weekly time frame. But first of all, major shout out to Bluffin or BTCC, because these two exchanges, you just need an email and a password. On Bluffin, you got 20% cashback, guys, and on BTCC up to $10,000 in rewards. The more volume you move and trade, the more airdrops you're going to get. You just need an email and a password, guys. Make sure to sign up with the first links down below in the description for those exchanges. Let's break down here the weekly time frame. Yes, we are trading beneath the 50 weekly moving average, but we have the biggest support zone here beneath $100,000. First one is the first major higher low of the higher time frame of the major rally that we got in April. This is the first higher low. This zone is crucial. This is a very typical higher time frame swing failure pattern where you do drop on the daily, maybe inside of the week, close a daily, weekly candle above this level, and you get that significant reversal. This is very, very common to see when you get beneath a major pivot, okay, on the weekly. Now, also, we do have the point of control, which is from 2024 and 2025 range here. This is a massive high volume node, which is just $1,500 beneath that higher low from the 22nd of June. Big major zone to start believing that this could get a major relief rally. But then where Elliott wave theory comes into play on the 4-hourly and 1-hourly time frame, which gives you even more probabilities, not because of the confluence that there is here beneath 100K, that we will be getting that reversal eventually. Well, it's more about analyzing the internal waves, guys, which we are going to do right away. So big support here beneath $100,000. Now, the overall question, are we going to test the lows, right? Do we test the lows one more time at 99K, drop down a few $1,000s and then reverse? Or could we reverse from this pivot? I can already tell you that this is the reversing zone, and the probabilities in breaking down from here, dropping down over $10,000 is extremely low probability. And this will be breaking down here throughout the next coming minutes. So bullish case scenario, right? What would be the bullish case scenario? We are analyzing the rejection from all-time high. No matter what happened in this zone, I am interested in the latest moves to the downside to try and map the situation where we're currently at. And the first obvious one is 3-wave move to the downside, right? Where we are looking at a simple ABC move from all-time high, 3-wave structure. Now, if we are analyzing this 3-wave structure here, we can clearly see here from all-time high that this looks better, counted as a 5-wave move to the downside, right? I think there's no discussion. Could you fit a 3-waver here? It's a little bit complex. You would have to go to the lower time frame, but it does fit in nicely as an impulse. 3-wave move to the upside to finish your B wave, and now we can see that we formed your leg down here throughout end of October, the bounce, another leg down, and now we're really just consolidating in a sideways WXY or even a triangle scenario, okay? We could be forming a triangle here. So I actually prefer the lows to be claimed, okay? Just because there's no major signs of strength here. There's no clear motive wave, impulsive move to the upside to believe that this is going to form a higher low, which it could, guys, okay? But it's just not too clear in my understanding looking at the lower time frame, 15-minute. It doesn't look too great to get that reversal. However, what we are looking for is that very likely reversal to happen. Now, if we were to finish here, speculating that this would be an ABC, well, you are looking for 1, 2, 3, 4, and 5. You're looking for that last 5th wave, just like here, 1, 2, 3, big wave with volume, 4 and 5, and then you get the reversal. So it would be ideal to actually create one more low beneath 99K, and that's where we do have eventually the biggest confluence zone. We have the higher low from the 22nd of June and the point of control sitting just over $1,000 beneath that level. So this area to finish that speculative fifth wave, without a doubt, is the zone where I would be looking for proof of support, exhaustion on the 15-minute, right? You want to really trade in this zone above one of these two levels for a couple of hours, right? This is a higher time frame speculation bounce, right? This is the 4-hourly chart. So without a doubt, you could form those wicks here. You really want to see that proof of support for a few hours. This is not an instant limit long and let's bounce whenever it happens. This actually needs to find support. You don't want to really break down this zone and be trapped into any long positions. Like a lot of people would be putting limit longs here and just go to bed. And then the next day we're trading at 90K, right? Which overall, I do think it's a lower probability, but we want to see proof of support on the chart and manage risk accordingly. So with this scenario, yeah, you're looking for that fifth wave down. A, B, C, eventually once you finish the fifth wave of your C wave, you're looking for that ultimate reversal, regardless if it's going to be a dead cat bounce in a 3-wave structure, or you're going to start reversing very aggressively in a third wave in the next 1 to 2 weeks after forming that low. Other scenarios that we want to take into consideration, okay, that we do have here. Well, there's another bearish case, which, well, this is part of that C wave, okay? Let's just break this down on the 1-hourly time frame. Just wanted to break down how this momentum just doesn't look too convincing, guys. I understand that a 1-2, 1-2 here, right? And then we move to higher levels. And suddenly break with a third wave, get everybody surprised of a major reversal. Could be, it could happen. It's just not too clear, guys, that these are impulsive moves, especially when we're downtrending like this, okay? We're going to be downtrending, major big moves, a major range after a big move. It usually signs that, it could be corrective, and, there's just a good chance that we do claim those lows that would be preferred, actually. So when we do analyze this scenario, this range of the last few days, we do have a potential zigzag move up in a wave W. We do have another zigzag down in your wave X, and then a flat in your wave Y, right? We actually rejected here from the previous day value area high on Friday, right? We did attempt to break above it and then back down. Now, there is the chance of this being the end. What we're doing here is building multiple 1-2s, and, we just end up breaking down here in a third wave, and then we form that little exhaustion here to form those 4-5s. After that big move down, this is what I would like to see, right? Get that choppiness and proof of support here at the 98 to 96K zone, where we can speculate that, okay, the fifth wave is finishing here, 1, 2, 3, 4, 5, and look for that big reversal to happen. So yeah, a triangle here is also one scenario where you have A, B, C, maybe your D wave is shallow, and then in another E wave, you just form another lower high, right? And then you don't need to hit the base, okay, to finish your waves inside of a triangle. As long as you have those two pivots, higher lows and lower highs, then your D wave and your E wave can actually be shallow. You don't need to hit the base of the triangle. And that's also one scenario where you end up breaking down. And then obviously you need to count your 5-wave move down here on the 1-hourly 15-minute, right, to try and detect that exhaustion coming down beneath here, hitting those major support levels, okay? So it's really going to be very technical. You need to be very, very patient for this scenario for the reversal if we were to come down there to see that exhaustion and that potential end of the fifth wave on the 15-minute time frame. So that is one thing here, just breaking down the 1-hourly time frame, okay? We're still downtrending. A possible another low here would be ideal, because that is where I would be looking for proof of support closing beneath, above those major levels, okay? The 22nd of June and point of control range, okay? 22nd of June higher low. And that's the moment that I would be really speculating either in longs here or longs here, depending on which one is going to get that reaction, okay, and actually holding our support to really look for that reversal. And the main target zone for that bounce is going to be the top of the range of the last few days above $104,000. So that's at least a $5,000 move up, regardless if that is going to be ending up bullish and going higher in the next coming weeks or not. But at least that relief rally is something that I would be saying that, there's a very good chance if we come down here and find some support based on the wave analysis and the confluence that we do have below $100,000. Now, breaking down other scenarios, of course, there is the multiple 1-2 scenario, which, for me has lower probabilities at the moment. Now, there's a few simple reasons why this has low probability. Usually your second wave 2 does overlap your first wave 1. Another thing as well is that your second wave 1 is larger than your first wave 1, and usually you want to see your second wave 1 and 2 smaller, okay, in price action and time, and that's something that is not happening. If we were to get that rally now here to $106,000-$107,000, we do have a lot of resistance between 106 and 108,000. Okay, we got the value area low of the range of October. We got the anchored VWAP from the pivot high of the 27th of October. We do have a naked point of control at 107.5k. This area, without a doubt, is going to be a struggle zone for Bitcoin. I don't see the price breaking through here very easily, right? And on the first attempt, and some pullbacks from this region of 106 to 108k, right? We're giving a bit of room here for volatility and attempts of going higher, is without a doubt an exhaustion area where the price could reverse, right? Regardless if it reversed strongly or it actually corrects down and we form a little bit of a channel-y situation, looks corrective, and we go to higher levels, okay? Well, that's your main zone of resistance if we were to get above 105k, right? The next zone is anchored VWAP, naked point of control, value area low, which is sitting, around about the 107k area, right? Give or take for the volatility, $1,000. So big zone. And for this scenario, I wouldn't speculate on a 1-2 if we were to be rolling down to the lows. The main reason why there's low probability, second 1 and 2 is larger in time. Even though if this wave 2, were to come up to this region throughout today and tomorrow, then your second wave 2 is also much longer in time and price action than your first wave 2, okay? Which obviously that's what you don't want to see, and that decreases the probability for a multiple 1-2 in this case. So if that does happen, right, let's say, oh, well, that's bullish then. We're not looking for a 1-2. There is a lot of resistance here, as explained. 107 and 108k zone, give or take that room for volatility. Anchored VWAP from this pivot high, value area low. You got a naked point of control from the price action of Monday. There's just a lot going on here, and we are down trending, right? We are forming lower highs. So this is a dangerous region for a lower high. And what if the price rolls down? Well, then what happened if it's not a 1-2? Because there's a lot of confluence here at this $106,000 to $108,000 range. Well, what I would be looking at here would be a potential of a contracting diagonal, which on the higher time frame is actually really good, because we are still, in the speculation that, we've formed a 3-wave move to the upside here. ABC flat, obviously we bounced here to the upside after forming that 5-wave structure that looks more as a 5-waver. But what if we are forming a contracting diagonal? Because your C wave of a flat needs to have 5 waves down, right? Where you have 3 waves in an A, 3 waves in a B, and then here on the C wave, 1, 2, 3, 4, we're not agreeing that the double 1-2 here locally from the highs of the 27th of October has the highest probability to then break down in a 3rd wave. What we could be looking at is a 5th wave of a contracting diagonal, okay? So it's going to be very interesting if we were to get up to 106 to 108k to actually check the reaction. There's many longs entering. This is, obviously analyze the internal waves. If we're getting exhausted into that zone, to look for that reversal move to the downside. Regardless if it goes down or it just is corrective, it is a rejection point between $106,000 and $108,000 that could bring the price down several $1,000s. This scenario, at the end of the day, does bring a big reversal to the upside, right? At least getting above these recent lower highs if we were to form a wave 4. Bouncing to the wave 4 is very, very common. So this would already be over a $10,000 move to the upside if that were to be the case, right? Because we are at least targeting the lower high of the 4th wave most commonly, right? When you get that bounce after a 5-wave structure. And the most bullish case scenario is that we just, we form a new major uptrend to the upside. So that's obviously something that we want to speculate. Regardless, if you come up and then down or come down from here, you are looking for a reversal. So, maybe some people would say, well, I'm just going to long from here. I feel, confident that this is going to happen, regardless if we come up, then down, and then up, or if we're going to roll down from here. I just, there is a scenario eventually that we just move up from here and we break through. There is definitely a possibility. So all of the scenarios, regardless of claiming the low, we are looking for a bigger relief rally. And, the most bullish case scenario here is forming that flat structure that, there's nothing invalidated about this zone. It's just the first few legs to the upside. As explained, it does look like a triangle structure. Okay, we do have a downtrend. It could be an a WXY sideways corrective structure. The movements to the upside, the bounces don't look too convincing for an impulse, right? I mean, technical analysis doesn't need to be perfect, but could it happen? Absolutely. Regardless of claiming the low, we are looking, or the highs first out at 107, 108K, and then down and then up. All of the scenarios point out that we are looking for a bounce. So, if you, really don't want to miss this shot, because obviously forming a higher low here is possible. I think, preferably we do claim the low, just because we're downtrending, and this movement throughout the last few days does look more corrective, triangly. The movements up don't look impulsive. I would lean on the lows happening first, okay? However, regardless of what happens, we are looking for a significant bounce to the upside, regardless if we claim the lows or not, because breaking down, as explained successfully with a big major move, having all of that confluence beneath us, point of control of 2024 and 2025, and the higher low of 22nd of June, which is a higher time frame, higher low, very classic for a higher time frame swing failure pattern. Yeah, you can trade, a couple of days beneath that level, but you're ultimately looking for, daily closes and even a weekly close above this zone to really look for that reversal. I would even say, a few 4-hourly closes, just wait for that exhaustion to happen to speculate on that reversal. Maybe it doesn't happen. Maybe we don't claim those lows as of yet, and we do actually, create that pump in the next coming hours. Sunday has been bullish in the last few weeks. We have seen some Sunday relief rallies. Of course, we're going to leave a CME gap if that is going to be the case. But ultimately, yeah, we could get that relief to the upside. Ultimately, right, the overall question right now is, do we claim the lows first or not before getting that larger relief pump? So you need to manage accordingly, okay? For me, it's not too clear. Anybody that wants to get into these lows with 1% capital and, just maintain, if we do get that movement down and hold on the point of control and the higher low of the 22nd of June, potentially add 1 or 2% to that position, just so you don't miss that relief rally if it does come from here or it comes from here after getting that support. But like I said, it's not clear that this is a, motive waves to the upside to get that, major pump to the upside. I have to say it's not too clear. So I'll rather remain patient. I know my plan here to the downside if we do claim these lows. And if it is going to be impulsive, we just need a clear 1, 2, 1, 2, 3, 4, 5, 4, and 5, right? We just really need a clear big wave here, finishing with 4 5s, and then that retracement that is going to give us that opportunity to say, okay, guys, this is a wave 1, wave 2. We're looking for that larger move to the upside. So, I mean, in a nutshell, this ABC flat scenario is still a chance. There's still a chance for this, where you have a 3-wave move up here throughout mid-October. The 3-wave down, I mean, for me in this case, preferably we do not claim the low. And now what you're looking for is that 5-wave move to the upside that has the potential to get above $116,000. Now, I have to say, with this being a double 1-2, it could be a shot where the 3rd wave is just going to be massive. However, I would prefer to see 1, 2, 1, 2, 3, 4, 5, 4, 5, then the correction, then the 3rd wave, and then 4 and 5. And ultimately on the higher time frame, see all of this as a 5-wave, right? I'm very, very skeptical that we would push all the way up here in a 3rd wave. I would say that it's going to be 3, 4, 5, corrective structure, and then we're going to move to the upside later on, right, in an impulse. So nothing too clear at this current moment for a reversal. I have to say on the lower time frame, it doesn't look too great. Levels of rejection is pretty clear for me. As explained, we do have the value area low of this trading zone of October with a naked point of control at 107.5k, which was created on Monday. That consolidation did leave a naked point of control, and it's also round about the 50% Fibonacci, okay, from the pivot high to the pivot low of this drop currently, okay. We also have that anchored VWAP that is coming down nicely throughout that area, slightly lower, okay, but overall it would be a big major range where the price of Bitcoin could definitely struggle here and ultimately form that corrective move or movement to the downside to claim the lows. This is the zone of interest to look for a rejection, okay, between $106,000 and $108,000, where I do believe the price could definitely struggle. And the main levels for longing, without a doubt for me, is actually claiming the lows again and looking for that exhaustion and closing above that either 22nd of June higher low or the point of control, and look ultimately for that reversal. Most of the scenarios that I've been going through here, regardless if we claim the low or not, is really looking for that pump to the upside. That could it be impulsive or could it be corrective, right? From here, or either claiming the lows and then moving to higher prices. That's what we're looking at here for the moment. Will it be corrective or impulsive? Claim the low or not? Manage a risk accordingly, guys. The most important zones of resistance out of the range that we do have from the last few days, because this is a bit of a cheeky range because we got the highs here from Wednesday and the lows here of Tuesday. Now, we came all the way down to almost hit the lows here at the 0.88 Fibonacci from this rally. And we also claimed the 0.88 Fibonacci from this drop to the downside. So it's a bit of a cheeky range. It is nice to trade the range because, in a nutshell, from a major pivot high, pivot low of a range, swing failure patterns are definitely really, really good trade setups. And I would say that this is still an acceptable swing failure pattern at 105k, where you do have that fair value gap, okay? Even though I would treat this, would be cautious. You just need that swing failure pattern from this zone at 105k. You got that order block, okay? Fair value gap. You also have the 50% Fibonacci from this pivot lower high to the low. There's just a lot of confluence to believe that we could not break out from this 105k zone and get that rejection, okay? So, I mean, this is a good zone for an intraday setup, okay? Will it claim the low later on or not? Well, that's another thing, right? But it's just a good area to speculate on a short on the rejection, stop loss at the high, in this region at 105k based on the fair value gap, 50% Fibonacci from the drop. We are downtrending. This could be a three-wave structure, then down, okay? Just, pay attention that this, people could get hyped up here with this rally to claim the highs and ultimately fail to break above 105k. So that's an internal level of interest to see if it does react. If it breaks through here aggressively, then obviously we're looking at the 107k zone, which is where we have our next level of resistance for that potential rollover later on, okay? And obviously claiming the lows, we got the biggest levels possible for that reversal, okay, to get that proof of support. Nothing much has to be said in this episode, guys. Hopefully this has been good value for you. Thank you very much for joining, and I'll see you in the next one.